Today was a wild day out there for stocks. Last night we see it rallying up, the NASDAQ and the S&P breaking the swing high. However, is this nothing more than a trap? Or are we about to start hitting some of these key levels and making a run to all-time highs? And stay tuned to the end. I'm going to share with you guys a simple fact. If stocks do not do this by tomorrow by 5 p.m., watch out. Now, when we come over and look at how the indices fared across the board, the Dow was down 17 points. NASDAQ was up 148 points. S&P 500 up 26 points, with the Russell 2000 being up 2.5. Now, we look at advancing issues versus declining. We had 52.6% of issues advancing on the day. Then as we come over and look at the sectors across the board, there was only 3 sectors in the red: consumer cyclicals, financials, and industrials. Utilities, real estate, communication services, by far outpacing every other sector, almost by double. Now, if we look right down here at technology also today did not do that bad. And if we come over real quick and we take a look at the XLK today, you can see basically looks very similar to the NASDAQ chart. They pushed it down today, and then we end up forming a hammer candle. Keep in mind, the MACD indicator is still crossed to the downside. AMD had another rocket ship day out there. We had this massive gap here, still has not been filled, and AMD is right on the verge of trying to make another new all-time high. Now, if we look at the fear and greed index, we are still over in the fear territory. We are only able to tick up 1 notch. Yesterday, the close was 29. Today, we're sitting at 30. So if everything is fine out there, why is the fear and greed index not moving its way back over into neutral or even back over into greedy territory? Keep in mind, as we look at the economic counter, today we were supposed to get the CPI data. Well, once again, we did not get that data, thanks in part to the government being shut down. That's going to make the Fed's job a little bit more difficult in 13 days when we have the next FOMC meeting. Now, right now, if we scroll down, we can still see the market is priced in a 97% chance that Jay Powell and company will be going ahead and cutting rates at the next FOMC meeting. We take a look over at crude oil. Now, this is a little bit troubling to me. You can see we have 2 different ABC patterns to the downside. The nearest one completes at 56.85, and we have a larger one starting from up here, the A to B leg, the B to C leg, and we projected down here somewhere around 55.27. Now, the reason why I say this is problematic, when crude oil is going lower, this is automatically telling us that watch out, the economies around the world are starting to slow down. Now we look at the dollar index. The dollar index today coming down just a bit, and you can see we're not able to get all the way up here at this swing point just yet. The dollar index still having a bit of trouble. We come over and look at the 10-year yield. 10-year yield eked out a small little gain today, and we got to be very careful about this. This could be kind of a double-ish bottom. Bottom number 1 over here, bottom number 2, and also look at the MACD divergence. And the reason I'm bringing this up is if yields start to rocket on the way up, guess what? The stock market is going to come under pressure. Then we come over and look at the precious metal gold. Anybody long gold, congrats. New all-time highs, can't stop, won't stop. Gold was able to complete our ABC pattern, but look at the MACD indicator. This is the highest level the MACD indicator has ever been in history out here on gold. Now, on the 4-hour chart, we can see that ABC pattern where gold finally completed. Let me know in the comment section down below, what price do you think gold is going to make it to before the end of the year? Right now, it's like can't stop, won't stop, jump in, hold your nose, hope for the best, and just pray we don't get a pullback if you're trying to go long gold at this moment. Now, we come over and look at the SPY real quick, the SPY. Notice the MACD indicator still crossed to the downside on the daily chart. Now, today we have a wick on the top of the candle, but we also have a wick on the bottom of the candle. We got roughly right in the middle of yesterday's range and then rejected right back out. Now, when we look at this on the 4-hour chart, this is going to be a problem because the further we've made it up on this big down candle right over here, the more likely we undo that whole entire candle. If we get that close to all-time highs, you guys know the routine. We'll probably see a new all-time high in this market. But in the event that the market starts to pull back here just a bit, watch out. We can see the market coming down towards this minus development area and maybe even down towards the high volume area, about 642.81. When we come over and look at the 30-minute chart, notice the MACD indicator does have a slight bearish cross, and we are just above the 0 line. So are we getting ready to take another leg lower? If you look at where the market actually is, we basically closed in the middle of the range. We tested up a little bit and we came right back down. But something I've been talking about for quite some time, when we look left, what do we have right over here? Here's going to be a minus development area that I talked about in several videos saying, watch out, we may make it back up and up into that area. Now, whenever we talk about a minus development area, the first time the market makes it up in there, what normally occurs? We normally see the market either consolidate or reject back down. Today, we rejected right back down, took out the low from yesterday afternoon, and then we rallied right back up near the highs of the prior day. I want to remind you guys right now, Take Profit Traders having a 40% sale off all their valuation accounts, 0 activation fee. Take advantage of this offer. Use code epitome at checkout. Now, we come over and look at the futures markets real quick. Look at the S&P on the 4-hour chart. Now, this is going to be problematic if you're a bear in the market. If we pull a Fibonacci retracement from the swing high right down here to the swing low, notice today we were able to violate the 786. Now, we did wick above it. That's quite a large wick up there, and then we started to come back down. So for me, the market went a little bit too high in order for me to look for any type of A to B equals C to D pattern on the way down. However, that does not negate the fact that we could still have a chance of coming all the way back down here and filling the gap that was left behind from Sunday night. Now, as I'm looking at this, notice we also were able today to go ahead and take out value area low off the weekly profile. And this was an untested value area low where the market clearly closed way below that price point, and we were able to make it all the way back up there. Now, as we come over and look at the 30-minute volume profiles, look, this is something we were talking about on the live stream this morning. One, if you look at last night, we had 0 pullback, Asia, London, and then this morning we're ripping up right into that minus development area. Now, the market ultimately did come back down. Thankfully for me today, the micros were able to get me back in the green. But one of the targets I was looking for early on in this market was for the market to come back and test the P point. And that's exactly what the S&P was able to do. Now, notice we're closing right near the point of control. So tonight, if we start making it below value area low at 66.97 and a quarter, I want to look for the market to come back down towards these candle bodies at 66.71.25. If we start breaking those levels, then I want to turn my attention towards yesterday's low and then potentially for a move all the way back down here, filling the gap from Sunday night. Now, we come over and look at the earnings calendar for tomorrow. We got to pay very close attention. Taiwan Semiconductors before the opening bell, and with the technology sector already been red hot for quite some time, this could be a key driving force either for it or against it. If it comes in horrible, watch out. The NASDAQ could be a little bit under pressure, and maybe that'd be part of the catalyst to see the markets coming back here just a bit. If we look at the economic calendar for tomorrow, the only thing that we really have on deck is going to be 8:30, the Philly Fed Manufacturing Index, and then we have a lot of Fed heads speaking throughout the morning. Now, coming back over and look at the Qs real quick. On the daily chart, we do have a bearish MACD cross, and we still have not come back up and retested this level, but notice today we are well above the 50% level of that massive down candle we had last Friday. And that really indicates that there's a high probability we come all the way back up, testing the top of that candle body. On the 4-hour chart, MACD indicator trying to flatten out down here just a bit. And again, we're just kind of chopping around right here. We're waiting to see which way the market's going to go ahead and break. On the 30-minute chart, MACD indicator kind of flatline. It's almost like the market is waiting for something. Now, if you guys think the market's waiting for something, let me know in the comment section down below. What in the world is the market waiting for? Now, notice if we do start bouncing up tomorrow, I like this whole entire minus development area. I think there's a good opportunity for the market to come back and retest this area anywhere from 604.26 up here to 605.69. Keep in mind, the first time we come up into it, we might consolidate or start to reject down, similar to the minus development areas that we talked about earlier in the video with the S&P 500. Now, tomorrow is going to be very, very critical, and more specifically by the 5 o'clock time frame, which I'll discuss here in a moment. But notice on the weekly time frame, last week we closed way below value area low. Well, today we were able to go ahead and test out that level. We wicked up, we wicked down, and now we're just below that price point. We start getting back above the value area low from the prior week. Watch out, we're probably going all the way back up here towards the point of control at 25,210.5. Now we come over and look at the daily profiles on the 30-minute chart. Notice last night we were able to take out the P point, and then this afternoon we came down there for a second attempt. Now, last night the market essentially opened up, kept going up, just like the S&P 500. Notice what we have right up here, kind of a hanging man-ish look candle. The body should have been a little bit larger on that. We broke below it. The market comes cratering right back down. We had a lot of key levels to this morning on the live stream. All those levels to the downside were hit. If you don't want to miss the next time I go live, make sure you subscribe. You have the bell notifications turned on for all. Now, as we're looking at this tonight, if we start breaking below value area low, 24,823.75, I then want to turn my attentions back down towards the candle body, that 24,747 and a half. Below that, we can look down for yesterday's low. But more importantly, let's scroll back here real quick. And I want you guys to pay attention to the gap from Sunday night. Keep in mind, we've already tested gap support. However, this is going to be critical. If we do not come back and fill the gap before Thursday, which is tomorrow by 5 p.m., if the gap is not closed by then, watch out. Quite often, it's going to be several weeks before we come back down and hit that level. So what does that mean? If we don't come back down there for several weeks, we're probably going to see the market not only rallying up to take out this point of control at 25,337, but we're probably going to see another new all-time high. Now, if you guys like to learn how to quadruple your payout with the new My Funded Futures payout policy, make sure to watch this next video right here.